Okay, so here's a list of some other cooperatives that we work with. I started the Illinois Food Retailers Association cooperative about 4 or 5 years ago. Again, this is something that we started off on that one with some of the ancillary coverages that are a little bit easier to get up and running because you don't have to deal with networks, you don't have to deal with providers, who's in what network. We got discounts on like life insurance, disability, those kind of things, and then we rolled out a medical program as well. You can see some of the other ones listed on here as well. I think one of the things that we've had a challenge with when we're dealing with organizations that are more national. I'm working right now with the Community Transportation Association of America, and they're spread out across the country, is that network issue, right? Blue Cross Blue Shield, right, in Illinois has the deepest discounts right now with providers, but they're not necessarily an option for an organization in California. And even if they are, they might not be the most competitive one. Kaiser's out there, right? And how does that line up across the country? You start to get a little challenged. But when you have an association or a group of employers that are pretty centrally located, it starts to get, I won't say easy, but easier to kind of pull this kind of thing together.
Quick question.
Yeah.
What's like the typical or the average size of each of, as far as participants in each of these?
Good question. I would say you're looking at Illinois Food Retailers is probably the smallest. That's got about 800 employees covered. IPVC is a little bit bigger than EBC. That's got, I don't know, actually, I think EBC is the biggest. That's got about 16,000. So, and again, I will say that the bigger you get, the more credibility it adds to the programming. It gets even more budgetable. You start to get, one of the other things that is somewhat of a challenge when you start to put one of these things together is response from the carriers, right? What we've seen in the small group market in Illinois lately is all these health insurance companies getting out of the game, right? 5 years ago, you had Mutual of Omaha that did health insurance, and they're not in it anymore. You had Unicare that did health insurance, they're not in it anymore. Just the last month, Principal did health insurance, they're not in it anymore. So we've seen this consolidation among health insurance companies where they're kind of fleeing the market, right? And more insurance companies are strategically thinking about, with respect to healthcare reform, how are they going to position themselves? If they're not strong in a certain area, it's very possible that they might leave that area. Okay, so one of the things that goes to the size question is the bigger the size, the more leverage we have when we go talk to the insurance companies in the market, right? It becomes more attractive to them. If I can tell you right now, even if I went to Blue Cross Blue Shield with 600 employees, it would be a huge challenge to try to get them on board to do a program like this. Okay, so it does open up some fluctuation with, some credibility within the insurance company's mind to try to get this program up and running with more employees.
Is the fact that a lot of people are jumping ship make it harder, like they're less responsive to these groups because, hey, we're the only game in town, so.
Yeah, I mean, to some extent, you're right. I mean, I think the insurance companies know. I mean, in the small group market, really, here are your options. You have Blue Cross Blue Shield of Illinois. You have Humana, which is getting less and less competitive. What we've seen from our renewals with Humana. You have United Healthcare that's making a big push lately. You have Aetna, you have Cigna, and really, that's pretty much it. You have some regional ones that do okay, but they're not AM Best rated. They don't have the greatest solvency. You don't necessarily want to put a group with a company that you have solvency concerns with. So, yeah, I mean, to some extent, they have you a little bit in the sense that they know what other competition they have out there.
Yeah, it is becoming more monopolistic.
Yeah.
Right. We're seeing that on the consultant side as well as the health insurance side. Now, the good thing about that is some of these health insurance companies, they're getting a little bit closer together as far as their discounts. Right, 5 years ago, Blue Cross Blue Shield had a much bigger gap between what their average discounts are compared to the other local competitors here in Chicagoland, like United Healthcare, Cigna. Right, we're seeing more and more, and we do studies on all these cooperatives to say every year, okay, what is the average discount? And we basically do a claims repricing. Okay, on EBC, the last one I just showed you, that's the whole thing is with Blue Cross Blue Shield of Illinois. What we did across all 16,000 employees that are in that plan is said, what would your cost have been if you had been with, let's say, United Healthcare, right? And that gap between insurance companies is going to get smaller and smaller. So while you're seeing some insurance companies get out of the marketplace, you are seeing that discount differential drop, which is in your favor.
When you make a pool arrangement with United or Blue Cross, how long is that deal in effect for in this changing market landscape? I'm curious about that kind of retention.
Sure. Once you have it established, it's in effect. Well, they technically give you a year-long renewal, but if they still have to give you a renewal every year. But let's say they give you a huge increase, it becomes much easier to take it to somebody else. So it's a concern would not be, hey, this company doesn't want to. We're not going to have this pool in existence because no insurance companies want it anymore. After it's established and it's got some credibility and likes to it.
Some of these names, like the last one, okay, Illinois Community College Consortium.
Sure.
I have to be a teacher at a community college to belong, right?
Yeah.
What about the Northern Illinois Health Insurance Pool?
So
Who are the employees here?
So what all these cooperatives have in common is some sort of overarching entity or association that sponsors them, right? So Illinois Community College Consortium, basically all of Gallagher's clients that are community colleges are able to participate in this. So it is, if you work for ABC Law Firm, you don't have access to this. As long as there's that overarching umbrella, like with the Illinois Food Retailers Association, that's, I'd say, the most similar to your group. What they have is basically an association of food retailers across Illinois, as long as you are either a member or an associate member, basically meaning as long as you are paying dues to the association, you have access to the cooperative. Okay, so what we've seen is, like let's say a Sunset Foods, for example, they're a member of Illinois Food Retailers Association, they have access to this program.
So what's the third one?
Northern Illinois Health Insurance Pool, that's for school districts. Similar to the EBC, we have two pools on the school district side. It's a little bit smaller, and it's more northwest suburbs of Illinois that are districts that are members of that.
So what's the possibility of several associations pooling together? Like our association is right now very small. What happens if we pool together with 2-3 other smaller organizations that are, I don't know what?
Or sponsor it?
I mean, who governs it? Who decides that these two associations do not belong to each other and cannot organize together?
Well, that's a little bit of a tough situation because it's more governed by the insurance company than anything else. So I'll give you a corollary example. What you'll see on some small group markets is you have to meet certain participation requirements. So let's say you have 10 employees and you need about 7 employees on the plan in order to have that plan up and running. Once you get to like 3 employees out of 10, they say we don't want that risk anymore. And that's a requirement that the insurance companies have in place. However, if the insurance company essentially isn't auditing that process, that group can kind of go on, keep doing what they're doing. So with some respect, it's the insurance company saying, all right, we need some documentation that these members are, or that these organizations are members of the association. And to answer your question, if a couple associations could pool together to do that, I'd have to check with our attorney on that. I'm not going to give you 100% yes, but I think something like that could be done.
I think there's also, though, there are some insurance regulations and whatnot in terms of like risk retention groups and risk purchasing groups and pools that in a non-uni setting that you have to have a commonality and there has to be something. And so the way that these typically go is through an association or something.
Yeah,
If they're not the non-profit ones, because otherwise
You're a resident of Illinois.
Right.
To be in this pool.
right.
Right.
There are, it's absolutely correct, and there are requirements that there has to be a commonality in terms of what you're doing, but I was going to save it for the end, but one thing we will talk about is the different groups now that are approaching us, like Local First Chicago, like Greg Maddox's group, which is the Local Fortune Network. How many LinkedIn folks do you guys have?
3,300-ish.
3,300. That are talking about there is a lot of different ways to bring up our numbers very, very quickly. Some of it's work that I have to do. Some of it's work that I need you guys to do. And that's maybe what we'll talk about at the end. But bumping this up to 1,000 people in a very short period of time
Totally doable.
is absolutely doable. I could do it by getting into 2 companies that are members of the SBAC, getting to their human resources person, which I can do through my contacts here because they're high-level partners at these law firms in different places, and getting them to buy into this. So let's talk about that a little bit at the end, but we can definitely build this up quickly.
Yeah, and I'll just piggyback off that. The more and more people that we can get, the more options that we can come back to the members and say, here's what all your options look like, right? So again, going back to how attractive it is in the insurance company's mind, or with a network, if we wanted to go with a more TPA type of arrangement, it becomes a lot easier to sell it to their underwriters with more people and say, all right, go to you then and say, you have more options, how do you want to structure this? Okay, so some successful cooperative requirements. Basically what we do is establish some sort of philosophy or homogeneous approach that everyone buys into before joining. One of the main things that we talk about here is just that every entity within the association that's going to this cooperative type arrangement has the understanding that, again, this isn't a 1-year type of fix to their 30% increase, right? We have to go with it with the understanding of, hey, this is going to be a long-term, sustainable type of solution. Okay, rules need to be established in order to prevent anti-selection or minimize the risk of participants using the plan and then leaving. Again, anti-selection is big in the insurance industry, right? That's one of the reasons why these insurance companies want everybody, universal coverage. They want everybody to have coverage because they can't be selected against, right? You can't have a person get on the plan when they need it and then kind of drop off if they become healthy, right? It hurts the loss ratio of the group. Okay, and then cooperatives, I mentioned this, I'm not going to beat it up too much, but generally most of those entities that we have as cooperatives have a 3-year time commitment. So what the EBC does is every 3 years, the executive committee will sit down and say, do we want to re-up for another 3 years, right? And nowadays that becomes pretty easy for them to get on board.
That was since '84, right?
Yeah, since '84.
Apparently, it's working.
Yeah.